Hello, my brothers and sisters. How are you guys doing? Hope you guys are doing amazingly well. So, in this video, we'll revise residential status. So, for you to determine the total income, for you to calculate the tax, and for you to file the income tax return, all this require the very first thing you have to determine is residential status. Then only you can determine whether this particular income will fall under the total income or not. So every assessee has to determine his own residential status, and either if it is an the person is an individual or the person is an HCF, then he will classify into resident and ordinary resident ROR, resident but not ordinary resident RNOR, or non-resident NR. But if he is other than individual or HCF, then he will either be a resident or he will either be a non-resident. Now, the situation is, if a person is a resident, that does not mean that in other country he will be a non-resident. Other country can have different provision regarding residential status. So a person who is an Indian resident can be a resident outside India also. So he can have more than one. He can have more than one residential status. And to prove whether the person is an Indian resident or not depends. If he is an individual or if he is a company, then it is the burden of the income tax department to prove whether he is an resident or not. But if it is other than individual or company, then it is the burden. Then it is the burden of the assessee itself. Why? The reason is income tax department will say that yes, he is a resident. Now it is the burden to prove that he is a non-resident who either other than individual or company. Yes. Now how will you determine the residency status of an individual? For him to be a resident, one, he should stay in India for 182 days or more during the previous year. If this condition is not satisfied, we have to go for the second condition. What is the second condition says? One, he should stay in India for 60 days or more. Along with it, in the four preceding previous year, he did stay for 365 days or more. Let's say an example. 24-25 is the previous year. In that year, he stayed for 60 days or more, and in the four preceding previous year, which is 23-24, 22-23, 21-22, and 20-21. In this four immediately preceding previous years, he stayed for 365 days or more total. Then in that situation, he can become a resident. Either 182 days or 60 days and 365 days condition is satisfied. He becomes a residential individual. But there are few situations says otherwise. If, for example, if an Indian citizen or person of Indian origin, his Indian income, which is total income other than foreign income, is an Indian income. His Indian income is more than 15 lakhs, then we have to see he did stayed in India for 182 days or more. That condition should be satisfied. If that condition is not satisfied, we have to see, instead of 60 days, we will say what? We will say 120 days. 120 days did he stay in India, and along with it 365 days. So instead of 60 days, it is getting converted into 120 days. If he is an Indian citizen or person of Indian origin, along with it, his Indian income, total income other than foreign income, Indian income is more than 15 lakhs. Now, second case situation, if Indian citizen or person of Indian origin, his total income is up to 15 lakhs. His total income is up to 15 lakhs, and he is a member of crew of Indian ship. He is a member of crew of Indian ship, or he is going abroad outside India for the purpose of employment. He is an Indian citizen, either member of crew of Indian ship, or his purpose of going outside India is for employment. In that situation, or an Indian citizen or person of Indian origin, they live outside India, they visit India, they just visit India for any purpose, then in that situation 182 days or more is the only condition. 182 days or more is the only condition to see whether he is a resident or non-resident. So yes or no? Yes. Now he can stay in the territorial waters. He doesn't have to stay permanently in Chennai or Mumbai. One day Chennai, one day Mumbai, one day Delhi. He can stay anywhere in India. That does not matter. Next, if he is leaving outside India, if he is going outside India, the day of departure, the day when he leaves or the day when he arrives, both day of departure and date of arrival, both will be considered as stay in India. He stayed in India. Residential status and citizenship both are different. Why? Residential status talks about what? Talks about how many days he stayed in India. Next. So what is person of Indian origin means? What is person of Indian origin means? If your parents or if your grandparents they were born in undivided India, what is undivided India? So now that is called as India, Pakistan and Bangladesh. If they were before 15th August 1947, they were born in India, Pakistan or Bangladesh, then that is called as person of Indian origin. Yes. Yes. Next, let's say, so that is one condition. One, he is an Indian citizen. Second condition, one, he is an Indian citizen. Second condition, his total income other than foreign income, which means an Indian income is more than 15 lakhs. Third condition, these two conditions is there, then what will you run in your head? Yes, only 182 days or more or 120 days plus 365 days. This condition should be satisfied for him to be a resident. Along with this third condition, in other country he is not taxed. For example, let it be Dubai. If in Dubai there is no income tax, or in USA there is income tax, but he is not a resident. He keeps on roaming. He is nowhere a resident. In this situation, is the three conditions. One, Indian citizen. Second condition is to Indian income is more than 15 lakhs. Third condition is in other country where he is not a resident at all. In other country he is not taxed at all for any purpose. In that situation, he is a deemed resident. So what is deemed resident? You don't have to see how many number of days he stayed in India at all. He is considered as a deemed resident. Now, so what do you mean? I told total income other than foreign income, foreign income, foreign income. What is foreign income? Foreign income means which accrue or arise in India, where that particular transaction is happening, it's happening outside India. That is called as foreign income. But if the business is controlled in India, it is not a foreign income. Or if the profession is set up in India, it's not a foreign income. Or if it is deemed to accrue or arise in India, which we will discuss in section 9, that is also not a foreign income. Next. So how can you be resident and not ordinary resident? If out of the preceding 10 previous years, you are resident for 2 years. Out of the 10 previous years, you are a resident for at least 2 years. Along with it, in the preceding 7 years, you are staying in India for 730 days or more. Staying in India for 730 days or more. So if these two conditions are satisfied, you are resident and all-day resident. But if these two conditions are not satisfied, or either one condition is also not satisfied, then you will be resident but not all-day resident, RNOR. Next. So we saw something about deemed resident. When can you become a deemed resident? Indian citizen. His total income other than foreign income is more than 15 lakhs. And in other country he is not taxed. He is a deemed resident. If he becomes a deemed resident, he also deemed to be resident but not ordinary resident, RNOR. You don't have to check 2 out of 10 or 730 days out of 7 days. You don't have to check. It is automatically he becomes RNOR. Third one. Next. If Indian citizen or person of Indian origin and his total income is more than 15 lakhs, then in that situation what you have to see? You have to see if he can be a resident only and only if he stays in 182 days or more, or 120 days during the previous year and 365 days in the 4 preceding previous years. Let's say he did not satisfy 182 days. I'll also show you. Yes, this he's an Indian citizen, a person of Indian origin, where he should be more than 15 lakhs, but he 182 days or 120 days plus 365 days. Let's say he did not satisfy 182 days. So but he satisfied 120 days. He satisfied this condition. He did not satisfy 182 days, but he satisfied 120 days. In that situation, if he satisfies this condition, he becomes a resident, but he automatically becomes a resident, but not ordinary resident. He becomes RNOR. Sir, yes or no? Yes. This is what is individual's residential status. Next, HEF. How can an HEF become a resident? If the control or the management of the affairs of HEF is situated in India, he becomes a resident. Otherwise, he is a non-resident. Now, we have to see how can an HEF become ROR or RNOR. That depends on the Karta. That depends on the Karta of HEF. If Karta satisfied 2 out of 10 and 730 days out of in the preceding 7 years, like how individual are the same, Karta satisfies it, then in that situation HEF becomes ROR. But Karta did not satisfy 2 out of 10 and 730 days out of 7 years. Then in that situation, Karta HEF becomes RNOR. HEF becomes RNOR. Yes. So next, company's residential status. 1. Company can be a resident if it is an Indian company. So what is an Indian company? If it is registered as per Companies Act 2013 or previous company law like Companies Act 1956 also, it is an Indian company. Along with it, if it is a foreign company but it has declared the dividend in India and it has paid dividend in India, that is also an Indian income, which we saw in the basic concepts, the chapter 1. Yes. So even that is also an Indian income. That will be considered as a what? Resident. If Indian income, it is a resident. Now, poem, place of effective management. It is in India, situated in India. What is place of effective management? Where the business is conducted as a whole, like key management and commercial decisions. If it is in India, that is called that is called as place of effective management situated in India, and that becomes a resident. If you are not satisfying any one Indian company also or person of Indian origin, place of effective management is also not in India, then you will become a non-resident. Company becomes a non-resident. So what about firm, AOP, BOI, artificial judicial person, local authority? If your control or management of its affairs is situated in India, then yes. If not, you become a non-resident. The same as HEF. Yes or no? Yes. For other than individual and HEF, there is no RO or RNOR. Only it is resident or non-resident. Next, how we have now we know how when a person becomes ROR, when a person becomes RNOR, when a person becomes NR. Now we will see whether the total income will get included in it. Whether he will include this income in his total income or not. 1. You will see income accruing or arising in India during the previous year, ROR, RNOR or NR. Yes. Income receiving or deemed to receive in India. So what is deemed to receive? Which we will see in section 7. So if income received or deemed to receive during the previous year in India, ROR, RNOR, NR, yes, it include in the total income. Income accrue or arise during the previous year outside India, then if it is an ROR, yes. If it is an RNOR, then only and only if the business is controlled in India or profession is set up in India, yes. Non-resident, no. Same for other than individual HF, there is no RO or RNOR. It is only resident and non-resident. Only difference is for resident, consider that as ROR. What and all we saw in ROR, yes. For non-resident, the above is non-resident. Same, yes or no. Yes. Just do this. Next, what is called as income deemed to be received in India means? If, as per section 7, what is it saying is, if the recognized provident fund is you are receiving more than 12% of the salary, or interest accrued is more than 9.5% per annum of recognized provident fund, or you are getting NPS, you are getting contribution of new pension scheme under section 80 CCD. That next, unrecognized provident fund is transferred to a recognized provident fund. Let that be unrecognized provident fund of the employer, or the contributions of employer, or the interest also. If you are transferring it to the recognized provident fund, yes, all this we will see in the salary chapter. All this the discussion will happen in the salary chapter. So wait for the salary chapter. Next, if the business connection, or the any property or any asset or any source is in India, or the capital asset is transferred in India, all this is what accrue or arise in India. But if business connection is in India, for business connection is in India, but an assessee is outside India, but assessee is outside in India. In that situation, there are five exceptions. What are the exceptions? What are the exceptions? One, operations. One, operations. If the operation is in India, we have to see whether if the operation is outside India. If the operation is outside India, we should not consider. Sir, give an example. Let's say 10% of the operation is only in India, balance 90% is outside India. So the profit of the 10% only will be included, 90% will not get included. Next, if the purchase is made in India and it got exported, so the sales you are getting, that and all will not be considered as Indian income. Third situation, if the news collection, if the news is collected in India and it is getting broadcasted or published outside India, that income will not be considered. Fourth, if film shooting is done in India, for by whom, by a non-resident, then uh, the non-resident individual should not be a citizen, Indian citizen, or if it is a firm, then the partner should not be an Indian citizen, and partner should be a non-resident also. And if the company is a non-resident, then the shareholder should be a non-resident and also not a citizen. In these conditions is satisfied, it does not accrue or arise in India. Next, if a foreign company is doing mining and they are taking out the diamond and they are displaying the uncut and unassorted diamonds in a special zone which is notified by CG in the official gazette, even that also will be considered as what? Will not be considered as deemed to accrue or arise in India. It will not be considered. Yes or no? Yes. Next, if salary. So how can I include salary in the total income? If you have rendered services in India, you can include. But let's say I am getting some leave, I'm getting some holiday, and for that holiday also I'm getting paid. In that situation, two conditions should be satisfied for you to take that into the total income. One, you have rendered services in India. One, you have rendered services in India. Second condition is in the contract itself, it's mentioned that you will get 2-3 months of leave. For that you will get the salary also. If these two conditions are satisfied, that income can be included in the total income. Next, let's say the service is rendered outside India. Will it get included in the total income? No. But if the government is paying the salary and the person who is receiving is an Indian citizen, then yes. So how can, sir? Example, Indian embassy. Indian embassy, Indian citizen only will be there, and also Indian government will only pay, or raw agents. Yes. So these are the situations. But perquisites or any allowance as per section 10 clause 7 will be exempt. It won't get included. Next, if Indian company has given dividend outside India, you don't have to worry at all. It gets accrued or arise in India. Yes. Next, most important, interest, which we will see here. Okay, we will revise, then we'll come up with the big summary. First, we'll do this study, then we'll come up with the easy summary. One, interest. If anybody has borrowed loan, a person, let's say somebody has given loan First, let's say government, one government, they have given loan to the government, and for which government is paying back the loan, and also it's paying back the interest. Now, whether this particular interest will it accrue or arise in India? Yes, if it is a government, it will get accrue or arise in India too. What if it is not a government but person of per PR, a person resident, a resident person is getting the loan? If resident person is getting the loan, then we have to see whether business or profession or any other than business or profession, he is utilizing it outside India. If he is not utilizing it outside India, then no problem. If he should only utilize that in India. Yes. Third situation, non-resident also same. Non-resident also same. We have to see whether business or profession or in other situation where it is outside India. He's no. We'll write here. Business or profession, he should use only in India. Business or profession, he should use only in India. Then only this interest income will get accrued. Yes. This is for what? This is for interest, loan interest. Yes. Next, loan as per section 9 subsection 1 clause 6 talking about royalty. What is royalty, sir? Sir, you are getting some software for, so example, getting the right granting license or taking any kind of property, you're getting the use of it, or getting any kind of particular information which got copyrighted, or you're getting services. All these are royalty. You're giving consideration for it. You're giving for this royalty. You're giving consideration. In that situation, if it is a government, if government is paying it, if government is the one who is giving consideration, then this particular royalty, I'm sorry, consideration, he will will get accrued. But if it is if it is a resident, if he is a resident, you have to see, yeah, business or profession or other than business or profession, he did not do it outside India. You have to see if he is doing it in India, then yes. But if he is a non-resident, you have to see that business or profession or other than business or profession, he should not carry on it outside India. He should carry in India. Yes, this is for royalty. Next, for fee for technical services, FTS. Fee for technical. What is fee for technical services? So managerial, rendering of managerial, technical, consultancy, or any other services. You're It is not construction, it is not assembling, or it is not mining. Yes, these activities are not fee for technical services. And if you are getting salary, you are considering this fee for technical as salary. No, even salary also will not be considered. Only profession, only this FTS will go in. If FTS, so if it gets accrued, then it will go under PGBP. If this is the situation, then FTS, if government is paying, then in that situation, yes, it will get accrued or arise in India. If he is a resident, is the person who is paying the consideration, he should see business or profession or other than business or profession, it's not carried out outside India. That you have to see. Non-resident also business or profession or other than business or profession, he should not carry on outside India. Yes. Now, again a summary. Interest. Government, you don't have to worry at all. Government, where you are investing, or business or profession or other than business or profession, nothing matters. Government is paying interest, it gets accrued. If resident is the one is paying interest, or non-resident is the one paying interest, then you have to see whether business or profession or other than business or profession in India. It only should be done. Loan or borrowing should be invested in India. That only should be seen. But if it is a non-resident who is paying the interest, only and only if in India, only and only business or profession in India, the amount borrowed is utilized, then only that interest will be accrued or arise in India. But In case of royalty and fee for technical services, government is the same. Government does, you don't have to see where government invested or for which reason government invested, you don't have to see. Resident, other than government, whether it can be resident or non-resident, a business or profession or other sources, business or profession, other sources, if it should invest in India, even royalty also, you don't have to see what government is doing. Resident and non-resident, it should invest in India. That's it. You don't, whether it can be business or profession or other than business or profession. Sir, yes, sir. Yes. Last topic, which this we'll discuss in income from other sources. As per section 56, subsection 2, clause 10. If a resident is giving any amount to a non-resident individual or foreign company or resident but not ordinary resident, what? Sum of money which is not a property, no property, sum of money more than 50,000 rupees, then it gets accrued or arise in India. Yes or no? Yes. So this is what we have seen. Now I have revised. There's a difference between I revising and you revising. I revised. You also partially revised, but you want to revise wholly. Then you have to recollect. You have to close your eyes. You have to recollect. For individual this situation, for HUF this situation, for company this situation, for other than individual company this situation. If it accrue arise in India, if it accrue arise outside India. So what is accrue arise in India as per section 9? What is deemed accrue or deemed received in India means as per section 7. Everything you have to recollect by closing your eyes. That's why I closed my eyes. Yes, I was not sleeping, by the way. So if you do this, residential status is over. But you are not doing this. You are not closing your eyes and you are not revising. In that situation, you'll be in a problem. So which problem you want? You want to partially revise, which I revised and you just leave it, or you want to wholly revise by recollecting? Choice is yours. Thank you.